Stop whatever you're doing right now, because something just happened in the last few hours that has massive implications for anyone holding gold and silver or thinking about precious metals as a safe haven. This is breaking news. This is happening in real time, and by the time mainstream media catches up to what this means, the move might already be over. The United States ambassador to Israel just sent an email to embassy staff advising non-essential personnel to leave the country immediately. Let me repeat that because I want it to sink in. The American diplomatic mission in Israel just told their people to get out. They cited an abundance of caution after meetings and calls through the night with the State Department. They told anyone intending to leave to book flights now because they expect a surge in demand for flights out of Israel. When a government tells its own people to evacuate a country, that is not a minor headline. That is a signal. That is the kind of development that moves markets because it tells you that behind closed doors, people with access to intelligence we don't have are concerned enough to take action. And how did gold and silver respond? Exactly how you would expect. Gold shot up to $5,220, gaining nearly 1% in hours. But silver? Silver exploded, up over 4% to $92.03 in a single session, on a single headline. That's the kind of move that normally takes days or weeks, and it happened in hours. Now, before I break down what this means and where we go from here, I need to ask you to do something for me. If you're watching this on YouTube and you're not subscribed to this channel yet, take 1 second and hit that subscribe button. I put a lot of work into these breakdowns to help you understand what's really happening in these markets. And your subscription helps grow this community so we can reach more people who need this information. So please, if you're getting value from this, show some love and subscribe. Turn on the notification bell so you don't miss updates when things are moving fast, because right now, things are moving very fast. All right, let me walk you through everything that's happening because this is a multi-layered situation and you need to understand all the pieces to see the full picture. Let's start with the geopolitical backdrop because that's what triggered today's explosive move. The United States and Iran have been engaged in nuclear talks in Switzerland, mediated by Oman. And according to reports, they made what was described as significant progress. The negotiations are set to continue at a technical level in Vienna. On the surface, that sounds positive. Progress is good, right? Talks continuing is better than talks collapsing. But here's where it gets complicated. The U.S. team has put forward extremely tough demands. They want Iran to destroy 3 main nuclear sites. They want any deal to last forever with no sunset clauses. Those are not minor asks. Those are demands that fundamentally challenge Iran's nuclear program and its strategic positioning in the region. And Iran's response? They've made it clear they will not allow any of their highly enriched uranium to leave the country. That's a direct contradiction to what the U.S. wants. The U.S. has signaled that Iran would need to either send those uranium stocks to another nation or dilute them. Iran says no. That's not progress. That's a standoff. So while the headlines say progress, the details say tension. And the embassy evacuation signal suggests that behind the scenes, U.S. officials are concerned enough about what might happen next that they want their people out of the region. Now let me ask you something. Where are you watching this from right now? I'm genuinely curious. Drop your country or city in the comments below. I want to see how global this audience is because precious metals are a universal language. Whether you're in the United States, India, the UK, Australia, Singapore, the Middle East, Europe, Africa, wherever you are, let me know. I read the comments and it helps me understand who's in this community with us. All right, back to the situation. So we have escalating U.S.-Iran tensions with no clear resolution in sight. We have the U.S. telling its embassy staff in Israel to evacuate. And we have gold and silver responding immediately with sharp moves higher. This is textbook safe haven behavior. When geopolitical risk increases, when uncertainty spikes, when the world feels less stable, capital flows into assets that have no counterparty risk, assets that have been stores of value for thousands of years. Assets like gold and silver. But here's the thing that makes this moment particularly significant. The geopolitical catalyst is hitting at the same time as several other major factors are aligning in favor of precious metals. Let me walk you through each one because the confluence is remarkable. First, let's talk about inflation data. Today we got the Producer Price Index report for January. This is a key inflation gauge that traders and investors watch closely because it measures prices at the wholesale level before they filter through to consumers. The report came in at 0.3% month over month, which was in line with expectations and down from the 0.5% reading in December. The core PPI, which excludes food and energy, also came in at 0.3%, well below the 0.7% reading from the prior month. What does this tell us? Inflation at the producer level is cooling, And when inflation cools, it gives the Federal Reserve more room to cut interest rates. Lower interest rates are historically bullish for precious metals because they reduce the opportunity cost of holding non-yielding assets like gold and silver. When bonds and savings accounts pay less, the relative attractiveness of metals increases. And we're already seeing this play out in the mortgage market. Here's a headline that should catch your attention. The average 30-year mortgage rate in the United States has fallen below 6% for the first time since 2022. We're now at 5.98%. That's a significant psychological level. And while it's being discussed in the context of housing affordability, it's also a signal about the broader direction of interest rates in the economy. Lower mortgage rates mean lower borrowing costs across the board. They reflect a bond market that's pricing in easier financial conditions ahead. And easier financial conditions have historically been rocket fuel for precious metals. Now let's talk about the dollar, because this is another piece of the puzzle. The US dollar index is trading weaker today, and a weaker dollar is directly supportive of gold and silver prices because these metals are priced in dollars globally. When the dollar falls, it takes fewer units of other currencies to buy an ounce of gold or silver, which stimulates international demand. So let me paint the full picture for you. We have geopolitical tensions escalating with a potential Middle East crisis. We have inflation data coming in softer, giving the Fed room to ease. We have mortgage rates falling to multi-year lows. We have the dollar weakening. We have Treasury yields dropping below 4% on the 10-year. And we have gold and silver responding with sharp moves higher. This is not random. This is multiple catalysts aligning at the same time. And when you see this kind of confluence, you pay attention because these are the moments that often mark the beginning of significant moves. Now I want to zoom out for a second and talk about where we are in the bigger picture for precious metals because context matters. Gold is now trading above $5,200 per ounce. Think about where we were just a few years ago. Gold at $2,000 felt like a milestone. Gold at $3,000 felt ambitious. Gold at $4,000 seemed like a distant target. And now we're above $5,000 and pushing toward all-time highs. This is not a market that's struggling. This is a market that's in a powerful uptrend driven by structural forces that haven't changed. Silver is even more explosive. We just touched $92. The gold to silver ratio has been compressing, meaning silver is outperforming gold on a relative basis. That's significant because it tells you investors are specifically choosing silver. They're not just buying precious metals generically, they're making a deliberate decision to overweight silver versus gold. And why would they do that? Because silver has the dual tailwind of monetary demand and industrial demand. It's not just a safe haven, it's a critical industrial input for solar panels, electronics, electric vehicles, AI data centers, medical devices, and advanced manufacturing. The green energy transition alone is creating massive new demand for silver that didn't exist a decade ago. Speaking of AI, let me share a headline that just came out because it's relevant to the broader economic picture. Jack Dorsey's company Block, formerly known as Square, just announced they're cutting 4,000 employees. That's nearly half their workforce. Why? Because they're betting on artificial intelligence to replace human labor. The company has been investing heavily in AI tools, including building their own internal tool called Goose. And now they're making, quote, bold and decisive action to restructure around that bet. The chief financial officer said they're doing it from a position of strength to move faster for their customers. But here's what that headline really tells you. The AI revolution is not coming. It's here. And it's starting to reshape the economy in real time. Companies are making trillion-dollar bets that AI will change the nature of work. And those bets are resulting in massive layoffs across the tech sector and beyond. What does this have to do with gold and silver? More than you might think. Economic disruption creates uncertainty. Uncertainty drives safe haven demand. When people see headlines about half a company's workforce being replaced by AI, they start thinking about their own job security. They start thinking about the stability of the financial system. They start thinking about protecting their wealth with assets that don't depend on any company or any technology. Gold and silver have been money for thousands of years. They were money before the internet. They were money before computers. They'll be money after AI transforms every industry. That permanence, that reliability, that independence from the chaos of technological disruption, that's part of what drives demand in moments like this. Now let me talk about the technical picture because the charts are confirming what the fundamentals are suggesting. Silver at $92 has broken through key resistance levels and is now trading with serious momentum. The immediate support zone is in the $88 to $89 range. As long as that holds, the uptrend remains intact. Above us, the next psychological target is $95, and beyond that, we're looking at the $100 level that everyone has been talking about for months. What's interesting about today's move is the speed. A 4% gain in silver in a single session is not normal. That's the kind of move you see when there's genuine urgency in the market. When buyers are not waiting for pullbacks, when capital is flowing in without hesitation. That urgency tells you something about sentiment. It tells you that for some participants, getting positioned now is more important than getting a better price later. Gold's move was more measured, but still significant. Breaking above 5,200 puts us in range of all-time highs. The support zone to watch is around 5,100 to 5,150. As long as gold holds above that, the path of least resistance is higher. Now, I want to address something because I think it's on a lot of people's minds. With prices this elevated, is it too late to buy? Have I missed the move? Here's my honest perspective. Nobody can tell you with certainty where the top is. If someone claims they know exactly where gold or silver will peak, they're either lying or delusional. Markets don't work that way. What we can do is assess the structural factors driving the trend and make informed decisions based on that assessment. And when I look at the structural factors right now, I see a lot of reasons to believe the trend has room to continue. Geopolitical tensions are elevated with no clear resolution. Central banks around the world are buying gold at record levels. The Federal Reserve is likely to cut rates at some point, which is historically bullish for metals. Industrial demand for silver continues to grow. Supply constraints persist because you can't just flip a switch and produce more metal. And now we have new catalysts like the Embassy Evacuation Signal adding fuel to the fire. Does that mean prices can't pull back? Absolutely not. Precious metals are volatile. They can drop sharply and then recover even more sharply. That's the nature of these markets. If you're not prepared for volatility, you will get shaken out at exactly the wrong time. But here's the key distinction. Volatility is not the same as a broken trend. A 10% pullback in a bull market is normal. It's healthy. It shakes out weak hands and resets momentum. A pullback only becomes a problem if it violates key support levels and changes the character of the trend. So far, we're not seeing that. We're seeing pullbacks getting bought. We're seeing dips getting absorbed. We're seeing the market reward patience. Quick question for you. When you see headlines like the Embassy Evacuation today, what's your first instinct? Do you immediately think about buying more precious metals? Do you wait to see how things develop? Or do you think it's overblown and ignore it? I'm curious how this community processes these kinds of signals. Drop your answer in the comments because I want to understand how you're thinking about risk and opportunity. All right, let me bring in another angle because it's important for understanding the bigger picture. The 10-year Treasury yield is now at 3.99%. That's below 4%, which is a psychological level that matters to bond traders and fixed income investors. When Treasury yields fall, it makes gold and silver more attractive. Here's why. Gold doesn't pay interest. If you're holding gold, you're giving up the yield you could earn on a government bond. That's called the opportunity cost. When that yield is high, the opportunity cost of holding gold is high. When that yield is low, the opportunity cost is low. With the 10-year below 4% and potentially heading lower, the math is shifting in favor of precious metals. It becomes easier to justify holding non-yielding assets when the alternative isn't paying much anyway. And here's where it gets really interesting. If geopolitical risks escalate further, Treasury yields could drop even more as investors flee to safety. Treasuries are traditionally a safe haven during crises. But guess what else is a safe haven? Gold, and silver by extension. So you could see a scenario where both treasuries and precious metals rally together as capital seeks shelter from geopolitical chaos. That's not a contradiction. That's what happens when fear grips the market. Everything perceived as safe gets bid up at the same time. Now let me paint a scenario for you because I think it's important to think through what could happen in the coming weeks. Scenario 1. U.S.-Iran talks continue to make progress. Tensions de-escalate. The embassy evacuation proves to be an overreaction. In this scenario, some of the geopolitical premium gets unwound. Gold and silver could pull back as the immediate fear subsides. But I would argue even in this scenario, the structural bullish factors remain. You might get a better entry point, but the trend doesn't change. Scenario 2. Talks break down. Iran refuses the U.S. demands. The situation escalates. Maybe there's a military incident. Maybe sanctions get tightened. Maybe the Strait of Hormuz becomes a flashpoint. In this scenario, you see oil prices spike. The dollar potentially weakens further as uncertainty grips global markets, and precious metals surge as safe haven demand explodes. Silver could easily push toward $100. Gold could make new all-time highs above 5,500. Scenario 3, a muddled middle ground. Talks continue indefinitely without resolution. Tensions remain elevated but don't explode. Markets stay on edge. In this scenario, precious metals grind higher as the uncertainty premium persists. You don't get a dramatic spike, but you get steady accumulation by investors who want protection against tail risks. I don't know which scenario plays out, nobody does, but having a framework for thinking through possibilities helps you make better decisions than just reacting emotionally to each headline. Now let me talk about something that's been on my mind, and I think it's relevant to all of you watching. We're living through a period of profound uncertainty. The geopolitical order is shifting. Technology is transforming the economy. Monetary policy is in uncharted territory after years of extreme measures. Traditional institutions are being questioned. Trust in systems that we took for granted is eroding. In that environment, I understand why people are drawn to gold and silver. These metals represent something permanent in a world that feels increasingly unstable. They've been valued by human civilizations for thousands of years. They don't depend on any government or any institution to maintain their worth. They can't be printed, they can't be hacked, they can't be defaulted on. That's not financial advice, that's just an observation about why these assets resonate so deeply with people in times like these. There's a psychological comfort in owning something real, something tangible, something that has stood the test of time. And I think that psychological dimension is part of what's driving flows into precious metals right now. It's not just about the technicals or the fundamentals. It's about a deep human desire for security in uncertain times. Now let me give you some practical levels to watch going forward, because if you're in this market or considering entering, you need reference points. For silver, the key support zone is $88 to $90. As long as we stay above that, buyers are in control. The immediate resistance is the $92 to $93 area we just hit. A decisive break above that opens the door to $95 and then the psychological $100 level. If we get to $100, expect fireworks, expect volatility, expect everyone to have an opinion. That's when the mainstream media will discover silver and the headlines will go crazy. For gold, support is in the 5,100 to 5,150 range. Resistance is the all-time high area around 5,300 to 5,400. A break to new all-time highs would be hugely significant and could trigger a wave of momentum buying from funds and institutions that chase breakouts. The gold to silver ratio is worth watching too. It's currently in the 55 to 58 range. If it continues to compress, that means silver is outperforming gold. If it expands, gold is taking leadership. Right now, the compression suggests money is flowing specifically into silver, which aligns with the industrial demand thesis and the smaller market size that makes silver more explosive. All right, I want to wrap this up by pulling together the key themes because there's a lot to digest here. Theme 1. Geopolitical risk is elevated and rising. The U.S. Embassy evacuation signal is not something to dismiss. When governments tell their people to leave a country, something serious is being considered behind closed doors. Theme 2. Precious metals are responding exactly as you would expect in a crisis environment. Gold and silver are playing their traditional safe haven role. The move today was fast and aggressive, which tells you there's genuine urgency in the market. Theme 3. The macro backdrop supports the bullish case. Cooling inflation, falling interest rates, a weaker dollar, declining Treasury yields. These factors all point in the same direction for precious metals. Theme 4. Structural demand drivers remain intact. Industrial silver demand continues to grow. Central bank gold buying continues. Supply constraints persist. The deficit in silver extends into its 6th year. Theme 5. AI disruption and economic uncertainty are adding another layer of safe haven demand. When people see headlines about half a company getting replaced by algorithms, they think about protecting their wealth with real assets. Theme 6. We're at a critical juncture. The next few weeks will be shaped by how the US-Iran situation develops. If it escalates, precious metals could surge dramatically. If it de-escalates, we might get a pullback that offers better entry points. Either way, the structural bull market appears intact. Now here's my question for you before I sign off. Given everything we discussed today, how are you positioning? Are you fully allocated to precious metals? Are you waiting for a pullback? Are you adding on strength? I want to hear your strategy. Drop it in the comments below because I read them and I'm genuinely curious how this community is approaching this environment. Also, if you've had success in precious metals over this run, whether you bought years ago or recently, Share your story. It helps motivate others who are still building their positions. And it builds a culture of learning from each other. We're all in this together. One more thing. If you're new to this channel and you found this breakdown valuable, please subscribe. I put significant effort into analyzing these markets and presenting the information in a way that helps you understand what's really happening. Your subscription supports the channel and helps us reach more people who need this perspective. So hit that subscribe button and turn on notifications so you don't miss the next update. The precious metals market is moving fast right now. Headlines are breaking, prices are reacting, and the decisions you make in moments like this can have long-lasting consequences. Stay informed, stay calm. Don't make emotional decisions based on fear or greed. Have a plan and stick to it. The embassy evacuation signal today was a wake-up call for anyone who thought geopolitical risk was priced into these markets. It wasn't. And if things escalate from here, there's a lot more repricing to come. Keep watching the headlines, keep watching the charts, keep your eye on the fundamentals, and most importantly, keep your psychology in check because markets like this will test you. They always do. All right, that's everything for today. I appreciate you watching until the end. I appreciate your engagement in the comments, and I appreciate being part of this community with you. Stay safe out there. I'll see you in the next one.